Hey there traders, it's Jeff from thestockbandit.com. Thanks for joining me for this video. It's time to take a look at the indices as we head into a brand new week of trading. Now last week was really a total non-event. In fact, each of the four indices that we're going to cover here, the Nasdaq, the S&P, the Russell, the Dow, all of them finished net changed by single digits. So there really was nothing going on. The market was just kind of on standby, waiting for some news to spur it one way or the other. All this talk about Cyprus, and of course there's big anticipation over the weekend whether or not a bailout deal is going to go through or fail, and what that may mean going forward, and can we gap higher or lower based on whatever that news happens to be. And so there's kind of a big anticipation as we head into the beginning of this coming week based on that. However, last week all this lateral price action that we saw in the indices was still very positive, because what that does is allow the market to kind of digest the most recent runs here by just kind of moving laterally rather than by retracing or giving back a lot of that rally. So for the Nasdaq, we've got kind of a few things going on here. We've got the highs right up here. That's at the 3260 level, and we're churning just beneath that. We closed on Friday about 15 points shy of that. But down here just below this short-term range is an unfilled gap, and it starts at 3200. That's this upper trend line, and then it would be filled with a move down to 3182. So there's kind of some room here to retreat and kind of do maybe a little bit of backing and filling, but for now the bulls are maintaining their edge here by not letting this market slip. For the S&P 500, this index also holding nicely above its previous breakout zone. That was at 1530. We did see a short-term pullback last week to 1538, which, so of course we held above this prior resistance area, which has become potential support. We are churning just beneath the recent highs right up here at 1563, and then of course just beyond that is the all-time high at 1576. So we're sitting just 20 points from that level, and we're of course able to make a move of that magnitude in one day or less. So there's certainly the potential here for the S&P to make an all-time high. I gotta say that after this rally and this rest, the market certainly isn't acting like it's done yet. Now we're getting a little bit more volatility up here. However, we haven't seen price back away. We haven't seen failed bounces. We're just not seeing the type of shift in sentiment just yet being reflected in prices. So we need to continue to keep a close eye on the price action and the levels. But all in all, the bulls are still doing a pretty good job of just maintaining the recent strength. Here's the Russell 2000. This index was down 6 points. It was kind of the big loser of the week last week, but that's again less than 1%. It's churning here just beneath its recent high, which is right up here at 954. So we're just 8 points from there as of Friday's close. We're also holding above this support area, which was prior resistance. Of course, that's the 932 level. So we're just kind of caught in this little box, you know, kind of this little rectangle type pattern here above a prior resistance level, and that's certainly positive unless we start to slip and fall back beneath this 932 area, in which case we've got room to fill this gap to 916, possibly even come back down and test this 894 level. Again, we'll have to see. And then finally is the Dow, which continues to keep Main Street excited with talk of all these new all-time highs of late, and the all-time high currently just a very short distance overhead, 14,546. We closed at 14,512, so we're just what 34 points from there. I've seen ticks that are bigger than that in the Dow, but we've got a really high level channel pattern. Remember, this index saw this big streak to the upside, and since then it has not given back any ground. It's just been moving laterally, marking time potentially for this to be a new base from which higher prices could be seen. So don't count out that scenario, even though we've carried a long way and we've sort of stalled out here in recent days. Now, a pullback, would that be a good thing? Absolutely. It would be very positive to see a little bit of a shakeup, to see kind of the weaker hands flip shares over to those with some longer term time frames. It also quite likely in every case of each of these index charts could result in a higher low versus this last little February pullback low. So I think that that's another thing to keep in mind. Just if we do happen to see a little bit of selling, there's not cause for panic, because again, the longer term trend remains up until we see something change. And so far, the trend has not changed. It's still up. So if you're looking for some trade ideas to add to your own, we've been nailing some pretty good trades lately inside the member area here at thestockbandit.com. Check out the free trial. We'd love to show you what we're all about. Other than that, thanks for joining me for this video. Have a great week of trading. I will have more for you soon, but until then, trade like a bandit.